Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Phil Harris, manager of the Edentree UK Equity Growth Fund. Hi, Phil.
Hello.
So a lot going on in the UK
Busy
at
times.
the moment. Economically, we seem to be not doing as well as hoped, with a couple of forecasts being downgraded. And indeed, politically, there is a significant turmoil, not least around the future of our Prime Minister. As a UK equity investor, how much does this sort of turmoil play into what you do?
It does very much so. I mean, I think it's fair to say that at the start of the year, we thought the UK economy was a little bit stronger than it was going to be. There clearly has been a little bit of uncertainty, not just Brexit, but clearly the general election over the summer has meant there's been a little bit of a slowdown in consumer spending. It's interesting, though, if you go out and talk to companies, the chief executives, although there's huge uncertainty over Brexit, actually, when you talk about individual companies, they're still pretty confident. So if you ask a chief executive and he'll moan at you about what's going on, the next question must be, therefore, you must be cutting your capex, you must be doing other things. Oh, no, they'll say, actually, things are very strong and my individual businesses are doing very well. So although there is that uncertainty on both the consumer and the investment front, actually things are reasonably good at the background. There has been a bit of a temporary slowdown. A little bit of that's the inflation that's coming through, but we're reasonably positive going forward into next year that things will turn around quite quickly.
And why is it that chief executives are positive? I presume it's because not all of the stocks that you invest in, or not all the chief executives that you talk to, are wholly domestically focused.
No, that's absolutely correct. So a large percentage of the earnings for sort of UK PLC are overseas. So about 60 to 70% generally of overseas earnings are there. So companies very much are talking about, you know, the European economies, which is very strong, Asia, which remains very strong, and obviously the US as well. So although there's a domestic focus to many companies, they are looking more globally. They're still seeing interest rates very low. They're still seeing inflation very low, and a general backdrop that's quite favourable. So they're sort of riding through any particular UK problems and looking more generally.
And what about the UK consumer? Because we are an economy that is built very much on consumer spending. Consumer confidence may well take a hit with Brexit. Is consumer spending a metric that you consider when looking at investment? Very
much so. And I think also it's not just the overall level of consumer spending, but it's actually how people spend their pound. So if you look at things like big ticket items like cars or sofas or big sort of purchases like that, the consumer is relatively cautious at the moment with a limited amount of money. You know, wage growth is very anemic. We've all got a job, unemployment's very low, but actually if you're in a job you have very little wage growth, perhaps 2.5%, inflation nearer 3%. So what you're looking to do is to target your pound onto something. And what are people doing? They are still going out for their coffees, they're still buying their Domino's pizzas, they're still buying those low ticket items, and also they want their holidays. So they're allocating that pound perhaps, you know, rationally into the things they want and deferring other things they don't. And that does drive our investment process. So we avoid motor retailers, you know, high ticket consumer stocks, and look at low ticket consumer stocks, Domino's Pizzas, we mentioned, Patisserie Valerie. So yes, very much that sort of thing does drive our investment process.
Phil, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.